Happy Thursday and welcome, traders. I am Rachel Deschelle, Senior Manager of Trading Services, and your host today for our Trading the Trend webcast, where we focus on technical analysis and trading the trend. Now, I am joined in the chat today by my friend and colleague, Connie Hill. Please feel free to chat in your questions, comments, requests during the session today, and please feel free to follow us both on X. Connie is Connie Hill CS. I am Rachel Dash CS. We post a lot of market updates, charts, all the fun things around. And please also, if you find this video useful today, please give it a thumbs up on YouTube, smash that like button, and please subscribe to us on Trader Talks Schwab Coaching. Now, I'm excited to be trading the trend with you today because we are going to talk about trading the trend with a Bollinger Band trading system. We're going to start by discussing how to trade a breakout or trend strategy with the Bollinger Bands. We'll touch a little bit on the mean reversion strategy with that one as well, but then we will dive into a scan for trend breakouts with the Bollinger Bands, and then we will place a couple trades using conditions. So before we get started, let's dive into those important disclosures here. So options carry a high level of risk and are not suitable for all investors. The information that we're going to cover is for general informational and educational purposes only and should not be considered any type of advice. And we are going to go through the paper money software application today. Keep in mind that there are some major differences between paper and live. One of them we will see on the scan tab actually when we go through that. Keep in mind that if you're following along with the scan, our study filters do not work in paper money. They only work in live. Now, getting into our agenda, we're going to start with a little market overview, discuss what's going on in the markets, talk through technical analysis, identifying trends, look at these trends in multiple time frames, and look at examples on charts and place a couple trades. So let's dive into Think or Swim. We're going to start right at the top with our market overview. So looking at the price action of just today and yesterday, we can actually see that we broke through this first level of support yesterday, which was right around that 75.60 level or so, or I guess 75.50 or so, that kind of zone that we had been consolidating around. And then today we went and we touched this, almost touched this lower kind of support level right around 7,500 or so. And we're kind of having a power move back above that level of old support, new resistance. Now, I guess new support again. So nowhere near that 20 period simple moving average down below. Still seeing a lot of strength in the overall market. If we are a trend trader, this is possibly, this little bounce from support could have been a possible time to possibly buy the dip on a trend here. And what do we say? The trend is your friend until the end when it bends. And this trend is not bending yet. So another one for you here actually to keep in mind is the S&P 500 equal weight. So this is just SPXEW. If you guys will notice, this chart looks quite a bit different from the chart that we just saw with the S&P 500. We can actually see that there was actually a little inverse head and shoulders, if you want to call it. It didn't have anything to reverse from, so we can't really call it that, but a little bit of a consolidation, maybe more of a cup and handle breakout there. That's probably a better term that we should use as technicians here with this formation. And we have a breakout to new all-time highs here. So if we think that tech is the only piece of the market that is leading, this will show you that there may be some strength in other pockets of the market too, as the S&P equal weight makes its way to new all-time highs, as the S&P is just digesting some of those gains here. So let's see. So let's take a look at the Bollinger Bands. Now, I want to take some of these. I want to start back with the S&P 500, and I'm going to take some of these things off the chart so that we can go and see what the Bollinger Bands are telling us and talk a little bit more about those. So, for those of you that are not familiar with the Bollinger Bands, this is essentially three bands. And so, typically, when you first add this study onto your chart, you're going to have typically three different colors of bands. I like to just see one color on my screen, so I changed the color of this one. But essentially, what you're seeing with the Bollinger Bands is that middle line is a 20 period simple moving average. And this band to the upside is two standard deviations above that simple moving average. This line to the downside is two standard deviations below that simple moving average. So if you think about a normal distribution curve, you're going to have about 95% of the price action within those bands. So when you have price breaking out of those bands in either direction, that is telling you that a tail event is occurring. And that's where trend traders like to capitalize on those with tail events. So kind of like some of those outlier type of events. Now, mean reversion traders like to focus on more of that type of reversion to the mean. So if something goes near the two standard deviation move to the outside, a mean reversion trader would expect price to move back to the mean or the average, which in this case is that midline, that 20 period simple moving average. So that's kind of what we're looking at here. And those of you that have not seen a normal distribution curve, tell me in the chat if you'd like me to draw that. But for those of you that have kind of heard about the Bollinger Bands, have used it before, this is kind of what we're looking at. So we have 95% of the price action here. Now there's a couple other things to really note about the importance of these Bollinger Bands. So just like a simple moving average where we have the slope of the line that gives us a bit of the signal. So we can take a look at the slope of these lines, and that will give us a signal to whether the trend could possibly be changing. So whether that trend is in an uptrend, whether we're in a downtrend, or whether we're in a little bit of a consolidation. So one example of that with the S&P 500, where let's say a mean reversion trader may have had a little bit more of an edge in this type of market, a mean reversion trader would have taken an entry right here with a bounce of that lower band and taken an exit right here with a bounce off of that upper band. So they're not looking for crosses through those bands. They're looking for price to just reach the upper part of the bands or the lower parts of the bands, and that's where they're going to take their positions because they're going to expect price to revert back to the average or to the mean, which again, that's kind of what we saw in this sideways trend where we had a lot of chop at the start of the year. And you can see also, if you look at the slope of the Bollinger Bands are this kind of straight three-line band right across the screen here. And so that tells you something about the trend. And in this case, the trend was non-existent. It was a range. It was a sideways trend in that case. So that is more of that is again more of, a type, giving more of an edge to a mean reversion type trader. So I gave you a couple examples of how to use the Bollinger Bands from a mean reversion standpoint, but we're all here in a trend trading class. So I want to make sure we focus our discussion on trading this trend because there's a few different ways to do that with the Bollinger Bands. And one of the major ways is the breakout trading strategy or the trend trading strategy with the Bollinger Bands. So, and I'm going to show you exactly what that is. So, when we're looking at the, let's say, for example, let's look at a breakout strategy to the upside. So, if we're looking at a breakout strategy to the upside, if we were to take a long position, we want to enter a position when we have a first break of that upper Bollinger Band. So that is where one would take a long position or a bullish position in this way. And since we're a trend trader, we as traders would not be closing this position until we see a close below the lower band. Okay? So unless we see a close below the lower band, we would not be closing out this position. So yes, price may be reverting to the mean a little bit. Maybe it's not. It's been pretty extended, well above its 20 period simple moving average for the last few months. But if we did start to see a little bit of a bend in the trend, a more cautious trader could take an exit at the 20 period simple moving average. But again, that doesn't give you much bend in the trend. So a trader would take an exit in that stance. Now, another way to actually kind of think about these Bollinger Bands too, since Bollinger Bands are a measure of your standard deviation. Another way that you can think about it is your variance of returns. So your variance of returns is definitely going to shift based off of volatility. So when these bands compress and get really, really tight, like they did really in this kind of consolidation that we saw there, that's telling you that price is trying to make a decision. You have the bulls from the bottom, the bears from the top. You have those forces of demand and supply really trying to squeeze and squeeze and squeeze the price for a breakout in either direction. And so when you're looking to be a trend trader, some of the things that you may be looking for with the Bollinger Bands is a Bollinger Band squeeze, because you know with the Bollinger Band squeeze, since volatility is what is for sure mean reverting, we know that lower levels of implied volatility or tighter bands or compressed bands will switch to higher periods of volatility, and that's when you get those band expansions. So I gave you a bullish example of where we would still be in that trend trade with the S&P 500. But let's just say we are looking for a little bit more of a bearish type of trade. I'm going to give you a couple different examples looking back here, and then we'll look at some live examples too. So taking everything into account, the direction or slope of the Bollinger Bands. So we want to make sure if they break to the upside, we want to make sure the Bollinger Bands have already shown a little bit of curve to the upside. That slope is up. And then if we are looking for a break to the downside, possibly after a consolidation like we saw here, we want to see those bands curving to the downside, showing us that that trend is in fact changing for us to capture that kind of tail event in that case. So what a bearish trader would have done in this case when they saw the bands curving over, when we saw this really clean break of that lower band, a bearish trader would have taken a bearish position, or we could say a short position. Keep in mind that there are risks with short selling. You have unlimited max loss because the stock could go up to infinity. So keep in mind, you do have some risk there, but maybe you're using options or other instruments to take a bearish trade here. You would have taken a short position here, rode it all the way down. A conservative trader could have closed that position right there with a close above that 20-day simple moving average, and they probably should have, because if we saw that break, which is where a trend trader would close their short position, you're basically flat from where you open the position to where you would have closed the position as a trend trader. And I do see a question in the chat. Would a TTM squeeze help? So let's take a look at a TTM squeeze, and let's talk about that a little bit more, because some traders do use a TTM squeeze, but that is a study that doesn't only include the Bollinger Bands, but it also includes the Keltner channels. And so the Bollinger Bands are a trend indicator that is also a volatility based indicator for price as well. But the Keltner channels operate from the calculation of an average true range. So they take the average true range of price, they calculate that based on their period, and they create ATR bands essentially. And so I'm going to add a couple of those since you guys asked about it. It may create some questions in the chat. I'm going to add the Keltner channels, and I'm also going to add the TTM squeeze because this will make a little bit more sense with this. So with our TTM squeeze, you will see a squeeze or TTM squeeze when this indicator is red here. So when you see that midline or that zero line, when it turns red, those little red dots like it did during this period of time that we talked about just a minute ago, that is when price is in a TTM squeeze. And essentially, what a trader is looking for is they're looking for typically like three similarly colored bars in either direction to take a possible trade. And so it was squeezing and it was squeezing, and you saw the first three green dots or the first three red bars after the squeeze. That would have been right around where we would have taken that short position as a trader with the Bollinger Bands. Now, that TTM squeeze occurs when those Bollinger Bands enter within those Keltner channels. So that's exactly what you're seeing there with that TTM squeeze. So a trader could actually use that as well. So if you like using the Bollinger Bands, but you want a couple different measures of volatility, a trader may use this TTM squeeze as well and look for three green dots in three consecutive bars after it comes out of the squeeze. So the squeeze being those little red dots in there. So that's when essentially when the Bollinger Bands exits the Keltner channels, because that shows that that volatility is expanding. And typically when volatility is expanding, you're seeing price breaking out in either direction. So keep in mind, volatility can be bullish or bearish. So if price is in this compression like we have seen, you can see price break out to the upside on an increase in volatility. You can see price break to the downside on an increase in volatility. And so that's exactly what we saw with the S&P 500 too. So hopefully that answers your question there, Paul, as far as just would the TTM squeeze help? It would in some sense, but again, that's if you're using the Keltner channels with your trading strategy too. So gives you a little bit more of a different signal, but not kind of too far off from what we're seeing here. So I'm going to remove that study and I'm going to remove the TTM squeeze as well. And we are going to actually build a scan next, but I want to double check if you guys have any questions here. Okay. And let's take a look at the TTM again, because I see some questions around there. And three dots is typically the, I guess, the level of confirmation. So I know typically when we are buying breakouts or we are buying support retests, whatever it may be, we're looking for sometimes 2 or 3 closes beyond a certain level or 2 or 3% break beyond a certain level. I know Kevin has his Horner rule of 3 closes beyond a certain level. So that TTM squeeze, kind of using that same type of rule with waiting for 2 or 3 types of green bars to kind of show us that there is a continued move in that direction. So the 3 green dots is just a little bit of confirmation coming out of that TTM squeeze. And then what would be the sell signal in that TTM squeeze? That would have been our sell signal. So if we're looking at that, that is basically when the Bollinger Bands exit the Keltner channels. So we saw that on our last one. When the Bollinger Bands exited the Keltner channels was right here when we saw that increase in the Bollinger Bands, when we first saw that first green dot there. So we saw it turn from red, which is the squeeze, to the green, which is that red to the downside. And if you wanted to wait for a little bit more confirmation, 2 or 3 bars or green dots around that level. Now, same thing for the bullish side of things. So you may have waited right here when you got that first green dot to give you that confirmation of that break. And again, that's a breakout of the Bollinger Bands outside of the Keltner channels, telling you that we have seen a breakout, and a trader may wait for a little bit more confirmation. So that's kind of the bullish side of things. So enough about the TTM squeeze here. Yes, a nod to the Horner rule. We love Kevin Horner. He does a great job, just like all of the coaches on this channel, Connie included. We'll give her a shout out in the chat. I have another question. Can you use this indicator intraday? Yes, you can. So you're kind of getting into one of the other questions that we touch on in this class, which was part of the agenda, is looking at multiple time frames. So you can most definitely use these indicators on multiple time frames. I'm going to look at the Bollinger Bands on a weekly for the S&P 500, and we'll talk through some signals on that one too. So if we look at the Bollinger Bands on the weekly chart of the S&P 500, well, let's look at a couple of the last cycles here. So if we were looking to be let's say a short seller, or take a bearish position, we would have looked for this break of that lower band. We would have ridden that all the way down, and this was a very volatile time where if you were a short seller, you probably would have had to close that position at that midline, at that 20 period simple moving average, because if you used the rules for actual trend trades for closing beyond that opposite band, you would have not closed that short position till up here. So that's kind of where sometimes when you have these wide, very wide expansions in the bands, that can also come with more risk as well. So keep that in mind when you are trading these systems. If you want a more conservative exit, you can exit at the 20 period simple moving average. Again, if you want to follow the trend system, you'll exit at the close beyond or the move beyond that opposite band here. And similar thing with what we saw here. So if we are looking at the weekly here, and I'm going to remove some of these drawings so they don't look so funky on the chart. If we are looking at the weekly Bollinger Bands here, you would have taken an entry with that first move beyond those Bollinger Bands. And so the first time it really went above the Bollinger Bands was this week, back in the end of April. And so you would be riding that up on a weekly basis until you saw a close beyond these lower bands. And of course, those lower bands are moving away from price right now because you have had such a large breakout, such a volatility expansion, because we had such a parabolic move off of those lows. So hopefully that helps there. Now, yeah, any of these indicators you can use on multiple time frames. I would definitely encourage that because every single trader or investor that is watching this webcast here, every single trader or investor in existence has a different time frame. We all have different time frames. Maybe even within our own portfolios, we're trading multiple time frames. Maybe we have a good chunk of our portfolio that is in our long-term holdings that we rebalance either quarterly, semi-annually, annually, whatever that may be. And maybe there's a portion, maybe a smaller portion of our portfolio that we are trading on shorter time frames. So maybe we're swing trading, maybe we're day trading, maybe we're trading the intermediate trend, whatever it is. So I would definitely suggest when you are charting, looking at the longest time frame first to get an idea of the primary trend, then piecing it down fourths by fourths. So maybe you're looking at the monthly, then you're looking at the weekly, then you're looking at the daily, then you're looking at maybe the hourly or 4 hourly. So kind of piecing it down that way. So that's just kind of an idea here. Now let's move and switch gears to our scan because we want to look for specific breakouts that we've been seeing. We're going to talk about how to trade those because I think it's important that we touch on just kind of some of those intricacies with the condition wizard as well, because we know that that's something that's really useful here in Thinkorswim when you are signal-based trading and trend trading. That way, you're not trading based off of emotions. You are only trading with your system. You are using the rules of your system and you are hands off at that point. So no emotions get in the way, no biases, nothing like that. We are trading based off of a trend system. So let's move to the scan tab and we're just going to look at a very simple scan and I will share this with you guys as well. And essentially what we're going to look for is we're going to look in all listed stocks with stock prices that are greater than $20 and have an average volume of greater than 2 million. I usually do that for option scans. I know some will look at scanning the weekly options, things like that. But if you are looking for more liquid options, usually looking at the more liquid stocks really helps in this scenario. And then as far as the last filter here, and again, these study filters, they only show up in your live trading. So keep that in mind. You will not see these in paper money. But essentially what you're looking at here is we did a custom study. So what I did was I went to custom here and I clicked on edit. And what I selected here first was price. I selected the close. So that's on a daily basis. The close is essentially like the current price. So when we have a daily time frame like we do here, the close is essentially the last traded price. Because if you think about a candlestick on a bar, it's constantly changing throughout the day. The only time that this is a true close is if you run this scan after hours, so after the market close. So I want you guys to keep that in mind, especially when you're building these systems here. So we're going to say close crosses above, and then all we needed to do was select studies, search Bollinger Bands here, and instead of midline, we select upper band. So we select upper band because we're looking for a bullish breakout. We're looking for a bullish trend because there is lots of bullish trends out there. We just saw that S&P 500 equal weight break to new all-time highs. So we're going to do a break of an upper band, and then I put in this section down here, it's going to tell us within 2 bars. So it has broken above or crossed above the upper Bollinger Band within the last 2 days. Now, if you just want a signal that pops up just for today, you can do that. This is just a way to wait for a little bit of confirmation to say within the last 2 bars, either today or yesterday, price has closed above that upper Bollinger Band. So we're going to hit save, and I'm going to click OK here. And then I'm going to click scan, and I will share this scan with you guys. Now keep in mind, these scans are not guaranteed for accuracy, timing, or results. So let's put this in here, and this is just that example scan. Okay. And if you want to do a more bearish one, you could say close crosses below the lower band. So you guys can do this in kind of both directions. So we're just looking at a cross above some of these. Now you guys are seeing this list pop up down below. Is there any that seems to stand out to you? Any that stand out to you here? I have a couple different ones that we could take a look at. There's a couple industrials and a couple tech stocks that we could look at. This PCAR one, I think I remember charting this one and posting this one on my X actually, because it had failed from a double top. So if we actually just take off the Bollinger Bands real quick here, which I would suggest you guys do anytime that you're first looking at a chart, you're again starting with the longer time frame. You're putting it in a context of where the price is within that longer term trend. Then you're piecing down in the next shorter time frame and the next. And so then we're drawing our support and resistance lines. So we had resistance up here. We had support down here. And for any of you guys that are in my price patterns class, we know what this pattern looked like. When I say looked like, past tense, it looks like a massive double top. And we did have a breakdown, but it failed. And so when patterns fail, or when these support levels fail, they become fast moves in the opposite direction. Because essentially what this is one last liquidity sweep. So one last liquidity sweep, and then you have that move to the upside if it moves above resistance. So a couple different levels to the upside, but let's do what this class is about and add those Bollinger Bands back in, and let's take a look here. So if you guys notice here, what are you seeing about the slope? So we talked about the slope of the Bollinger Bands. That is going to give us some valuable information about our conviction in taking a trend trade, because we're not just looking for a break of the upper Bollinger Band to take an entry as a bullish trend trader. We're not just looking for that, but we're looking for the context of what the slope of these Bollinger Bands are actually doing. So what are you guys saying or thinking about the slope? If you guys can kind of put that in the chat, I'll give a couple of my thoughts as well with what we're seeing here. So we've clearly been in a downtrend before because price has been below its 20-day, and we know that it broke support here. But notice what we're noticing about that 20-day right here. So we've noticed that the 20-day has actually flattened out and price has crossed above it. So we notice that when that simple moving average actually starts to flatten, that's our signal of a possible change in trend. And as soon as it started to do that, we had that confirmation or that break above that 20 period simple moving average. And what also we're seeing this curve up or this slope to the upside of this upper band of the Bollinger Band as well. So that's telling us that that direction or that slope is really changing in that scenario. And we can see the lower band like it's done before because this is a squeeze here. This is a very tight area. This is a squeeze. That lower Bollinger Band is going to continue to expand opposite of price because we had a squeeze before it. So volatility was compressed, volatility was very low. Now we have a price breakout, a volatility kind of breakout here. And so what we want to watch is we want to watch these two upper bands. So we want to watch this band here, this midline. We can see that it flattened out, showing a possible change in trend. Then we have the upper line curving to the upside as price is breaking above it. So as a trader, we may say, hey, this is enough confirmation to take this bullish trade to the upside. And so where could we, or how could we possibly set up this trade? I'm going to show you guys a couple different ways. So what we're going to do is we're going to do a buy custom. We're going to use a $10,000 OCO bracket. And, or actually, no, we're going to do we're just going to do with stop for right now. And I'll show you guys how to build this. So what we're going to do is we're going to take $10,000. We're just going to do a little math here. $10,000. We're going to make this to sell 100% of the position. We're going to link those together. Okay, now we know that we would take a trade right now because we see a cross of that Bollinger Band. So that tells us that we could take a trade right now on this order. And so what we're going to do is we're going to put a market order. And we're going to say that we're okay submitting this at the next available price because we saw that break of the upper Bollinger Band. And so what we're going to do to the downside, we're actually going to make this a market order as well to say that as soon as we get our signal, send this order immediately. And we're going to go to the little gear on the right-hand side. And we're going to put in our exit order. Because remember, we talked about how our entry on a trading system or trend trading, the Bollinger Band is an entry when price crosses above the Bollinger Band and an exit when price crosses below the lower Bollinger Band. Now, again, if you're more conservative, you could put in the 20 period simple moving average, but a true trend trader is not looking to exit until they see a bend in the trend, and the trend is your friend. So we're actually going to go to this conditional order entry, and we're going to open that one up. And we're going to say when PCAR study Bollinger Bands, we're actually going to go to edit, ThinkScript editor, or condition wizard actually. We're going to use our condition wizard. We're going to hit edit, and we are going to say when price, and we're going to say the close crosses below study Bollinger Bands. And we're going to say instead of the midline, well, if you want to be more conservative, you could use the midline, but we're going to say when it crosses the lower band. So we're going to ride that trend and have it be our friend till the end. Okay. And we're going to click create. Okay. And we're going to hit save. Okay. You guys see how I did that there? We're going to go through this a couple more times. We have about 10 minutes left in this class. We're going to go through this a couple more times so you guys can see what this looks like. Again, these market orders, they are conditional based off of the price of the stock. So again, you have some risk with market orders. They fill immediately whenever that condition is met. If that condition does not, so these conditions don't work in the extended hours, so keep in mind these are only during the day session. So we're going to hit confirm and send here, and we are going to hit send. Okay, so that's how we're going to trend trade those Bollinger Bands there. Now let's look at another one that popped up in our list too. This one was on my watch list at the same time. So TER. So TER, let's take a look at this one. So this is Teradyne. Now this trend looks a lot different. So this has been in an ongoing uptrend. You guys have seen this. So this has been in an ongoing uptrend. We had a little bit of a consolidation here where we had a little bit of a double bottom pattern forming, where a mean reversion trader would have looked at this as a place to kind of enter maybe into a long position during a consolidation. But right now, we are seeing a move above. Actually, yesterday we saw that first move above. We're again seeing a move on that upper Bollinger Band. And what are you already seeing with the slope of this line? It is already curved to the upside. Price has retested its 20-day simple moving average. So again, this could be another one where we could say, hey, we're going to take a long position here, and we are going to look to possibly close that position when we see a move below those Bollinger Bands. Another thing that you could do too as a trader is you may take a directional options trade as well. So if you wanted to take a directional options trade, a couple different things that you could do would be, as price is coming out of that compression, as price is coming out of compressed volatility and expanding to the upside, you could say, hey, maybe now's a good time to be a buyer of options. But right now, you still see that volatility in this name is pretty elevated. So a current implied volatility percentile of 90 could tell us, hey, maybe now is a better time to be selling options. So another way that you could play this could be, we could look for a short put vertical or selling a put at this level of former resistance, now new support. You could also use the 20-day simple moving average for that as well. So let's take a look here. That area is right around like 365, 370. Let's just take a look at what the premiums are giving us. So we're going to look at a shorter term time frame here for this one, the 26th of June. And I'm going to collapse that left sidebar. And what do we see? Okay, we don't have a ton of open interest or volume in these. So yeah, we don't see a ton of volume or open interest, and the spreads are a little bit wide. So let's go through and place the same trade that we did the last time, but let's do a more conservative one where we actually use the midpoint or the midline of the Bollinger Bands as our exit. So we're gonna go through this again so you guys can see. We're gonna do buy custom with stop, and we're gonna place this for $10,000. $10,000. Whoops. And we are going to sell with a 100% if we have that break. We're going to make this a market order on the entry. We're going to do the same for the exit, and we're going to use our condition wizard. Okay, we're going to go back down to method. We're going to say study, go to edit, and we are going to look at our conditions. We're going to click edit here. We're going to say when the close, or when the price, the close, crosses below the study of the Bollinger Bands, the midline. Okay, so we're going to use that. When the close crosses below the midline of the Bollinger Bands, this is where we are going to take that exit. Okay, so we're going to hit save. We are going to hit create, and we are going to hit save. Okay, we're gonna make that second one good till canceled. The only time that you can have a market order good till cancel is if you have a condition in it. So keep in mind, same risk supply here. We're gonna hit confirm and send on this one. So you'll have the read back of your order here. We have the midline is true. Perfect. So we have that in there. Now we have a couple minutes. I'm going to make sure we have, we keep in mind with some of these questions that we are seeing in the chat. Okay, so I'm seeing a question about the creating alert when the two moving averages cross. Yes, you can definitely do that. You can create an alert, you can create an order, you can create a scan when the two moving averages cross. So if you're looking to create an alert, I believe you have to do it on the scan actually. But let's double check here. So don't quote me on that quite yet. I haven't done this for an alert in a while. So if we go to create alert, and we go based off of price and we use a study and we say edit. Okay. So we're going to use the same condition wizard and we're going to click edit again. And we're going to say, let's see, let's do the 20 period crossing above the 50 period, for example. So you're going to have your simple moving average on the left. You're going to change your length and you're going to say 20 and you're going to select crosses above. You're going to select study again, search for your simple. I know some of you are looking at the whole moving average because that's something I know James Boyd uses in this class. Sorry guys, hate to break it to you. I had a different topic today. And then we're going to use the 50 as the cross. So this is kind of like a bullish crossover, what we would call a golden cross, the 20 crossing above the 50. You can do that vice versa as well, and you can hit save. And so you'll read out the script here, a simple moving average length of 20 crosses above the simple moving average length of 50, and you will hit create. Okay, so then it'll show up as study is true. You'll go down to notify with, however you want to be notified with that alert, and you can hit create. And so that is how you create that alert there. Let's see. I see Riceberg saying, Rachel, I noticed that when your order went through, the stop order was canceled. Let's see, which one are we to? I know the stop order is still in for Teradyne. Let's see with PCAR. No, that one's still in. What you may be seeing, Ricebird, is actually, so when you do a trigger order based off of something other than the price or other than the units or number of shares, this actually becomes a trigger order within itself. So you don't actually see the trigger within this, but this is actually a trigger that does the math for you. It cancels out that trigger order and then sends the order based off of the calculation so you don't have to do the math. So a lot of times when you do see a cancellation pop up, it is because of one of those types of orders. So you'll see that in your messages as well, like that trigger was canceled. So good question there. So, this webcast will be archived. I will share that example scan in the notes, but hopefully today this gave you an example framework for trading the trend using the Bollinger Bands, things to look for like the slope, like the compression. We talked a little bit about the TTM squeeze as well. And then also just kind of giving you some rules as far as removing yourself from the process, automating the process a little bit more. So hopefully this helps today. I appreciate both Scott and Connie in the chat. Please follow them both on X. We have Scott Thompson CS, Rachel Dash CS, which is me, and then Connie Hill CS as well. If you found this video useful, please smash that like button or just give it a gentle thumbs up to show a little less enthusiasm there. And then please subscribe to us on Trader Talk Schwab Coaching. Thank you, everyone. See you later, traders.